Well, I think the market has started on its end of year favorable seasonal trend. We recently went through a pullback that brought the S&P down less than 6%. But then because of encouraging retail sales as well as corporate profits, the market turned around and is now back above its 50-day and 65-day moving averages, which are positive from a technical perspective. But you're right, there are still headwinds that we have to contend with. We have oil prices remaining above $80 per barrel. We have the yield on the 10-year note above 1.6%. We had industrial production come in weaker than expected. So it seems as if the market wants to work its way higher, but needs additional reasons to optimistic. So I think it has to wait for more corporate profits to come through to feel justified with the reversal. Well, it is a concern that there is certainly enough demand, as we saw from last week's retail sales data, but the supply is the issue. Now, consumers are pretty resilient. They can find items to purchase for the upcoming holiday. It might not be exactly what they were hoping for, but those companies that have inventory that is delivered by air freight rather than by truck could end up being more successful. So our belief is that retail sales will be improving in this final quarter, and that could actually be accelerating inflation, because if people still want to buy something even at a higher price, they're going to do so. No, I don't think investors should be worried, because the Fed has done a very good job of telegraphing what it plans to do. Because of this transparency, I think it has allowed for additional tranquility. So November is likely to be a very important month, because our belief is that inflation will peak in November and average about 5.7%, 5.8% for the final quarter of this year, but then start a very slow reversion to about the 3% level this time in 2022. The Fed will probably announce a tapering program at the November FOMC meeting and will then carry that out through the summer of 2022. And it looks as if now that the first rate hike will take place in September of 2022, not in early 23 or even the fourth quarter of 22. It looks as if it is being moved even closer. So right now, the guess is that September of 2022 is when we'll see the first rate increase by the Fed. Well, the reason for the expectation that inflation will be coming down is that this is a year-over-year comparison. And since by the third quarter of 2022, we will be making comparisons with higher prices the year earlier, meaning where we just were in 2021. So therefore, prices in a sense will not be coming down, but rather the rate of pace, the rate of growth will be slowing, because prices have already increased most recently. That's right. And next year, the rate of pace will be slowing down because it has more challenging comparisons. So with the percentage being higher in 2021, then whatever number we see in 2022 might be higher, but at a slowing rate of pace. Well, most economists say that a 2% rate of inflation is a good thing, because then that continues to keep consumers going to the store and buying things. Because if we go into a disinflationary spiral, meaning that this month the prices are lower than last month, lower than, and so forth, people will wait to buy something, saying, well, I'll wait till next month when the price will come down even more. And that is not good. So if the prices just continue to creep higher like this, then that tends to be a good thing overall. It seems to be an equilibrium level that consumers can handle.